What's going on, everybody? Welcome back to the Trajecta Talks podcast. Now, for today's episode, we're doing something a little bit different. We're not going to be talking about any financial concepts or theories like we typically do. Today, we have a very special guest on the podcast with us. And although we don't typically talk about positions and things that we're trading, today we're going to do just that. And we're going to talk about some of the thesis behind some of our decisions, why we put on certain trades. And to help me do that, today we have none other than Ethan Whites. Ethan, how are you doing?
I'm great, buddy. Thank you. It's good to be here.
Unlike other podcasts where it seems like everything's a little bit scripted, today Ethan has no clue what I'm going to ask him about. So we're going to fly by the seat of our pants, see how it goes, and it'll be a very candid, exciting discussion, I think.
It's good to be here. I'm excited to go through this with you. Hopefully, I don't mess anything up and ruin your podcast, buddy. So
No, I'm excited. I know this is only going to add value for us and the viewers. So I think my first question for you is, I know you and I have spoke at length about AI and more specifically OpenAI, ChatGPT, Sam Altman,
yeah.
Jensen Huang, NVDA, and sort of your short idea there. So I know this is probably a big can of worms, so get right into it.
This could last a while. Yeah. So the short thesis I have is now starting to become a little bit more similar with other people, but it started with, I guess, the first sales we were making were at about $180 a share. And when you're shorting stocks, you're rarely selling the high, no different than buying stocks. You're not buying the low. So my thinking was I'll make a sale at NVIDIA at 180 and we'll start there and we'll probably have to scale up. I didn't know how bad it was going to be when I started and how painful it was going to be. But my thesis was a couple of things. I didn't, we'll go through sort of the numbers portion, but I did not like how often I saw the CEO of NVIDIA and on every podcast, on every CNBC opportunity, every Bloomberg. And it came across to me as a little promotional. When you're the CEO of a top one or two largest market cap company, and you need to be out there every day talking about your stock and how much business you're doing and how the appetite for your Blackwells or whatever chip it was is insatiable. My thinking was everyone knows the CEO of NVIDIA, but nobody knows the CEO of Berkshire Hathaway. Or tell me the CEO of who's Tim Cook gonna announce this is like nobody care because these guys have to work 60, 80 hours a week. They don't have time to be on every pod. So I'm sort of, it became a little bit self-promotion. I didn't like that. It's not a good enough reason to short a stock. And then I noticed that Sam Altman was doing a little bit of the same thing. And I noticed the minute I started shorting it, I was reading about it every day. You learn real quick when you're losing money. There's no quicker way to catch up with what the narrative in the market is on your position. Besides, you have a bad position and you're just like, oh, geez, I got to go through everything here. So that was a turn. I didn't love that. It's not a reason to have, as I said, a full position. But I think a lot of what's generating the AI boom is a product of the last 10 years of whether it be EBITDA, free cash flow of the Mag 7. I think the number I had seen last was over the last 10 years, the Mag 7 generated roughly $2 trillion in EBITDA. That's looking for a home. That's looking for an idea. They don't buy back. A lot of the growth companies aren't buying back stock. They're not paying dividends. The goal is to grow. But these businesses, which you and I have basically talked about, I'll describe them a little bit more specifically, are essentially monopolies. Pretty big moats, and if not monopolies, maybe duopolies. And I was starting to, or I'm still starting, just not like the NVIDIA trade has totally worked yet. But I'm starting to think that a lot of what you're seeing in AI is a product of these hyperscalers having this balance sheet to do this. The reason that you and I, and again, I'm happy to go through specific trades at some point. Some of them are extremely embarrassing, but we can talk about it. The RPO number from Oracle was pretty definitive because the price action there, stock opens up 20%, I want to say, and on this huge backlog of, I want to say, 350, 70, $390 billion of obligations they had for further build out. And it was essentially OpenAI's book. And I saw the price action and I realized that the street is sort of not giving a long amount of rope to the financial stability of OpenAI. Not to mention it was basically one customer. So let me, I feel like I'm jumping around, but the, the fact that, Jensen basically didn't say no to a podcast or an interview. Sam Altman, same thing. Potential monopolies creating all this free cash flow, looking for a home. I believe that AI is an extension of search. I don't think it's as big as the internet. I think the internet we didn't know what search was. We didn't know what AI, but I think AI is essentially search on, huge amount of multiples bigger, and I know hopefully adds more value to the world. So those few things I didn't like but I started understanding why the end of September, NVDA basically investing $100 billion in OpenAI and getting this huge pop on the stock. And we were shorted at that point. But one of the things we've talked about is with 75% gross margins in NVIDIA, when he makes $100 billion investment saying, make sure you invest back in me, I read it as just a $25 billion cash outlay. He's getting basically essentially $75 billion back. If those are the margins, right? And for $25 billion, he got essentially 4 or 5% pop in the stock. Obviously that hurt. And he got, I think it was 100, there's 25 billion shares of NVIDIA outstanding. So he probably got, I think the stock was up 4 or 5. And I remember you and I talking about it or texting about it. I was frustrated. So for $25 billion, he got basically a 5-6x move and guaranteed customer. So those are, I can go through more specifics in terms of other reasons I wanted to be short NVIDIA. I don't think guys are treating Michael Burry favorably in terms of his thinking is a lot of these hyperscalers are the cook the book expression is an awful one. I think it's wrong, but you're using the depreciation schedule these companies are using. He said should be less than 6 years because these chips are basically useless at the end of 2 or 3. So 6-year depreciation, you have, obviously you can, over that period of time, you can write off a smaller amount each year. I won't go into specifics. So it looks like your free cash flow for 6 years is more. His point is, hey, just use them for 3. The depreciation schedule is not a reason to be short. In my mind, that's not new. And frankly, the old chips are still generating, from what I've understood, a huge amount, if not 100% revenue. So even though it's a basically dinosaur chip, it's still doing business. It's not a total write-off. So there's other sort of narratives going on this, why guys are short this. I came up with a few of those ideas. None of them, I basically barely know what a GPU is. But I can tell you the thing that, and this is the last thing I'll say about, and we can sort of go back and forth in terms of specifics. If you look at the Mag 7 or outside of NVIDIA, these essentially are monopolies. And I think that's the street pays a premium for monopolies. We can go through each one of them, whether it be Google with obviously search, YouTube, Waymo, some, probably 1, 2, or 3 in cloud, Amazon retail cloud, Microsoft Office, and I guess OpenAI to start off with. Apple services can, I guess, have Samsung as well. These are basically companies that have market share and really can't get disrupted, right? I think at $5 trillion, that's basically what people are saying that NVIDIA is, which is there's no competition for NVIDIA. NVIDIA is a chip company. You make chips. It's not a software company. Software company is a different story. That's what's generating. OpenAI is the reason that NVIDIA can sell chips. The language models, or Anthropic, or obviously now Gemini with the TPUs. There is competition out there. So I don't think they have the moat that some of these other companies do. So I started this sort of process, very, very frustrating, of making sales probably from 180 up to 195, 200. We got that weird Friday break where Trump and sort of went after China, and SPOOs went down 100, and we were able to cover a bunch there, and then it ripped again, and I started putting it out again. I think the last thing, that the reason I got a little bit more aggressive recently is because, well, that's it. I'll leave it there. I have too many other things to talk about with this, but I'll keep quiet now. So that's it.
Okay. Okay. Well, let me just follow a question because I'm curious now, and it came up for me during you answering that first one. How how much less bearish would you be on the, let's not just say necessarily Nvidia, but the AI and data center complex as a whole, had so many companies not started issuing, in my opinion, a inappropriate amount of debt to finance the whole thing?
Right. So that's the best question for me. That's one of the most important things, which is, and you and I talked about that, which is, you love this idea because you can afford it and you have the free cash flow. Oracle, the bonds, or at least the sort of puts on bonds, which are basically these things called swaps, or CDSs, let's just say, started to trade as if it was okay to have free cash flow and use it there, but it's not okay to borrow money for this idea. So I really love this idea as long as we can afford it. And Oracle essentially is showing us they had to, let's say the number's almost $100 billion. In terms of the swap market, I think the swaps have spread from, or gone up from, let's say 10, 15, 18 to almost 70 now. CoreWeave, I think 650, 700. The Oracle bonds are actually 30-year bonds. That's why they're trading a little differently. But the point being, just I think that, just rather than get too technical, I think the bigger issue is the price action and what you're starting to see. The equity markets are okay with this. The credit markets are not, and the credit markets tend to be balance sheet. Equity investors are income statements and cash flow statements, right? So there's a lot more due diligence that goes into bond investors, credit investors, and they're like, okay, we're just going to stop this at this point. So that definitely was a big signal for me as well, or starting to be. Again, this stock can go. It's, I thought it was starting to manifest my thinking, and all of a sudden I'm proven wrong pretty quick by the fact the Fed has said they're probably, or it looks as if the Fed's going to lower in December. But yeah, that's a great point.
Well, last question before we move on to the next thing I want to talk about. You and I had discussed the TPUs from Google potentially being we don't know how large a slice of that market they'll end up taking. So, given what you know about China, and you've been doing this for a long time, and you've seen their market develop over how many years now, what probability would you handicap them having these advanced lithography machines that ASML was making? Do they maybe have their own technology? Is that something you see could be a potential?
Yeah, I mean, I think that's a great question. In I had just, we spoke about it, but I just finished reading that Breakneck book by Dan Wang, which was excellent. This is not a country that's going to sit by and wait for us to decide whether we're going to sell them our most up to speed NVIDIA chip. I think it comes across disrespectful, if you ask me. And I think they've addressed that. I think, to your point, there's been talk about that. I obviously don't read anything different than you read, but my instincts are that if they're in a competitive race for AI, no different than when Tesla was manufacturing there and BYD became effectively learned how to manufacture the best, electric car.
Yeah.
And I think now $100 billion in revenues, whatever they do for the year, bigger than Tesla. Um, so I think they are, and I don't know if you've seen the same reports. I think there is, whether it's a threat from the U.S. with the TPUs, or whether it's potentially AMD, or whether it's China. This is a proud country that is not going to sit by and do nothing and wait for us to make this decision. So I think and from what it sounds like with DeepSeek, well, initially the first time you and I were short that one in January, I don't know if they were using older NVIDIA chips. From what it read like they were, I'm not tech savvy enough to break that down. I barely know what the GPUs are. So for me, I think the more we tell the world that this is some race against China, the more that China wants to compete as well. I just don't feel like they're doing nothing. And I think that NVIDIA is priced as if China doesn't have any idea what they're doing with regard to chips. And as you saw, AMD was priced that way. I think Google was priced that way. And this is not I don't think NVIDIA, from your reasoning standpoint, you and I talking, this is not a company that has a monopoly by any means on that.
Let's shift gears a little bit here and move away from AI data centers. Although I know you could talk about it for a while, we might have to come back to it later. Let's talk about. I know you were long United Health earlier in the year, which turned out to be a good trade. Let's talk about CNC Centene, which I think you're currently long.
Let's talk about UNH before we talk about it turning into be a good trade, because I started buying that at roughly 300 at the beginning of summer, and it went down every day after I bought it. And I think you were obviously aware of it. It was not a good trade for a long time, and then finally I think it found its level, and we got lucky. And once Buffett announced his stake, I made the sale. I had been there long enough where it was the right thing to do. I should have sold a third or a half, and I unfortunately was like, I'm just done. This seems to happen with these things, and I should have kept some. So the thinking with UNH was I might have kind of checked out too soon on the healthcare trade. Healthcare has basically been, in my mind, an inversion trade to tech. So anything that grows a bunch is getting a lot of money. Anything that has a steady growth, or in some ways it's not even steady, they've actually declined, has been sold, and in many cases decimated. So that's basically the UNH. And so I realized there might be more to the healthcare trade, and that's where I went to Centene, which is CNC. And I'll talk about that for a second if you want. That was not a giant, nor is it now a giant position, because I was and I still am, even though I've made it a lot smaller. Was so consumed with NVIDIA. Yeah. The truth is, from a dollar standpoint, I should have. I'll give you the Centene trade real quick. I started buying it into the shutdown, because I was of the belief the Republicans were going to push for some sort of positive deficit scenario to come out of the shutdown. Obviously, that didn't happen, but the reason is because we really haven't. At the beginning of the year, we had been talking about $2.5 trillion a year in deficits, and we're going to get down to 3% deficits on, opposed to, let's say, we're at 6-7% deficits. I thought this was one of the ways that you'd finally see these really smaller sort of premiums for Obamacare that a lot of people are paying start to have to go up 5, 10, 15, 20%. You didn't see it. I had been buying it during the lockdown, or shut down. Sorry, I'd been buying it before. I've been buying during. I had a cost basis basically in the mid to high 30s, the 36, 37. I never got above that. I bought some at 35, and then the day that the shutdown was over, the stock went down 10%, and I was my thinking. Forget all the silly emotions that go through you. You got to do something, and we've talked about that. You have big moves in stocks. You either have to, in my case, buy more or get out, but you can't sit and watch. But I did sit and watch for a period before I was, okay, am I going to make a 33 and a half sale, or am I going to add to it? The speed of which the stock opened down, I think, was the stock has a big short, or has had a, shouldn't say big, has had a short interest in it. I think that short interest is stale. It's been around for a long time, whether it be management, whether it be the group, whether it be because of MOH, UNH, all these names have basically this year imploded. But up until the Buffett announcement. So for me, that day, I did not make a sale because it bounced back very quickly. Which again, as I said, it looked to me like a short was sitting on the stock. And then long sellers did not fill in to make further sales because the news wasn't new. Because the government basically said, okay, we'll deal with this in January. We're not going to not deal with it. We're just going to wait. So I didn't make a sale. I actually added to it a little bit, but probably not that day. And the other thing I kind of liked, it's basically, as I said, if tech's going up, healthcare is going down, which means to me, I think tech's had too big of a move, and some of these names I'm short, then healthcare should do okay. And that's basically what's happened. And the stock, I think, now has gotten above 40. I made a small sale. I think it's probably got more legs into next year, though, and I haven't done it, as I said, not a big position. I haven't done a ton of research on it. It's not a well covered. It is covered well, but the research on the street is all of it looks very similar to me. So I haven't done any other digging. So that's the CNC for right now. So far, it's okay. It's not. It had been paying for the NVDA addiction for a little while, and now it's a little yeah, stuff's working out.
Okay. Well, this next one I want to talk about, it's not, I don't think it falls into the category of being maybe an investment idea or much of a thesis to talk about, but in terms of trading, I think the way you managed it is worth our time talking about. So let's talk about Cleveland Cliffs.
Oh my goodness, that was awful. But we could talk about it. But it was awful. Yes,
But
yes.
that's right, you cut.
No. We'll keep talking. We'll keep talking. Yeah, that was the trade that turned into an investment, and then how I was going to manage it the way down. My thinking there was it was right around the time that rare earth was in the headlines with China, and whether or not whether they were going to continue exporting to us or not, or whether we were going to start to basically invest government money in some U.S. companies to do it, which there's ones that exist already. I won't get into them, and I bought this stock around a large block. The company has had probably a tad too much leverage. Whether or not there's a recession and how they handle it could be difficult for them. So the thinking was it basically trades at 4 times debt to EBITDA. That's a big number for a bank to lend on. That's right, 4x EBITDA. That's you need to sort of address that. That means just for argument's sake, let's just say a company does $1 billion in EBITDA a year, they'd have $4 billion in debt. So the idea was, their thinking was, let's sell equity to see if we can get it to 3 turns. Okay. And I liked the idea. I like the group because of, as I said, it's a steel company, but I think there was starting to become some rare earth CEO who's maybe said it in a sort of a little bit more of a attract attention way, that we're starting to find some rare earth metals, and the street liked it. I liked it for a couple of reasons. I did not like it for as bad as this became, and how much I wanted to attention I needed to spend in time on this one. I bought a decent amount of it, and right off the bat, I knew I had a problem. And it's end of the year, so there's a component of capital gains, capital loss, which I'm trying to be sensitive to as well. And straddle some in 25, maybe push some to 26. So I immediately start long the stock and selling calls against it. And I think I sort of brought this up last time, you know it. There was a point where the stock kept going down and the calls almost lost all their value. So you buy a stock at $12.50 and you sell the calls for $1. The stock goes to $11.70 and now the calls are 30 cents. You don't have any more basically protection. You have 30 cents of protection. If stock goes to 9, you need more than 30. So for me, I was like, okay, let me rebuy, stay long the stock, rebuy, and then resell another strike, rebuy, resell another strike. I kept doing that. I think I did that probably 3, if not 4 times, while the stock was going down. So basically creating short-term capital gains, but I have a loser on the equity side. So the last trade was, okay, this stock went down like as fast as a stock can go. I mean, geez Louise, this was torture. And it went from 12.5 to 10 basically in a straight line. But then something happened where it stopped going down when the group was going down, which is other steel names. It stopped going down when the market was going down. So it showed me, okay, I feel like, and I've been staring at this point for enough time. The block initially, I think, was 75 million shares. That traded multiple times over, meaning if you had bought the stock and you wanted out, you had many, many days to get out of average daily volume. Facilitated that. Yeah. So you had all the time you want, you had all the volume you want, you had liquidity. We got to finally $10 a share. I think it traded $9.90, and I was like, this is just. But the nice thing is it started to respond better to, as I said, other parts of the market, which I was sort of trying to watch with it, that I had noticed for the week before it was correlated to. Right. So then I went out and I sold some March options. So I'm basically, the thinking is, come the end of the year, I'll probably try to take off a capital loss now because I have some gains for this year, and I'll flip and I'll take the capital gain side off in first week of January. So that's the trade. It was not, it was not pretty. This spent a lot of time in my head on that one. Yeah.
Okay. Let's. So that, yeah, I think that's a great one to go through, just because it speaks a little bit more to the trading and like how your brain works, and it's something like that, as opposed to, the NVIDIA thing where you have like a story behind it a little bit.
That's just, yeah, the cliffs, the CNC, some of these things just become mechanical to me. Yeah. And I'm with you. I know this, and with others, I probably am more animated or describe something overly sort of, as I said, hands and face, and but when it's occurring to me, there's nothing to me. It's extremely black and white what I need to do. Yeah. I don't have any questions. I don't need to double check in with anybody. I know exactly the task at hand, and I know I need to do it. And I don't have, however much I can express myself before and after, and how extremely difficult it is, and why do I still do this, and why am I all these silly questions in my head that I, after 1,000 years, continue to ask myself. It is just a 1, 2, 3 step thing. There's no noise in between that. There's plenty of other noise, but when I'm doing it, I know exactly what I'm supposed to do.
It's a trading, investing, finance podcast. All the other noise, we have to save that for another. That's so good. Let's talk about Comcast.
Yes.
Yeah, I know that's 1 year long right now. And then is that the last, or is there other ones you wanted to discuss?
No,
These
that's
are the
all I'm
ones.
happy about. I
Okay, yeah,
don't.
yeah. We can also go back to AI after this.
I can finish with AI shortly.
Perfect. Tell us about Comcast.
Comcast is a good year end name for me, and I feel like the when I see year end name, there's names that get sold because they are tax losses for a lot of people, and in a year like we've had in technology, there's people have a lot of gains. Um, the quarter they reported, which I think you pointed out to me, frankly, um, I'd love to see that price action. So I had been watching it. I had read some notes from a brokerage firm on the street about it's getting almost so cheap now you have to. Okay, there's still not a reason. Cheap stocks get cheaper and expensive stocks get more expensive. When they reported their quarter, which was sort of this disappointing loop they're in with losing cable and the cord cutting story has been going on for years. I think the thinking now is becoming the second derivative, meaning how bad are you losing customers now? Are you losing customers less bad? So I love the price action there. I like the fact at the end of the year, because I think, as I said, there's some tax loss selling now. There's a yield of about 4.7, 4.8%. And the other sort of nuanced trading thing is while I'm watching tech go down, similar to Centene, but this one is almost like as if there's algos that you and I talked about set up for this. It was almost tick for tick. The tech goes down, and some of these cable names were going up. So I like it for that reason. Also, I can get more in the. Well, I shouldn't say that. I don't know that much. I know it trades for roughly 5 times cash flow. They do have a decent amount of debt. The son, Brian Roberts, of the basically founder, is at this point now going to have to do something. One of the things he's trying to do, or putting himself in a position to do, is buy a portion of the Warner Brothers deal, which I think Paramount ends up getting just from, I think it's the political thing that you're seeing happen. Roberts has been very supportive of Biden. I think he will end up not getting it. I think that Paramount ends up winning, and I think David Ellison ends up getting it. And I think at that point, assuming Comcast doesn't do it, he's going to have to address something with the price of the stock, which is either large buyback. I believe this is also where you'll start to see some value guys. There's other cable names trading 3-4 times cash flow that also where it's unlike fiber, cable can be everywhere, and I don't pretend to know much about the cable business, but I'm also finding out how their growth in cellular is roughly 30% a year. So you're starting to see these advertisements or emails if you have Comcast or Charter, where hey, they're reselling obviously cell phone data. Their denominator is considerably cheaper than the obviously capex that was spent from Verizon and AT&T to build it. So my point is, there's a price where at let's say it's 5 times cash flow and a nice yield end of the year, some things start to make sense. I have not made it a big position yet, but it's intriguing to me because I also think if that sell tech mentality shows itself again, it hasn't the last couple of days, but if it does, I feel like these are the names that have yield, that don't grow, right? That's similar to what we were saying about Centene, which is utility kind of minded stock, which is I could almost tell you for the next year what we're going to do in business. And I think that, as I said, it's time for the CEO to address this. So I don't yet. I have added to it, and I added to it at the exact wrong time. So it's one of those names I have to buy when it's for sale rather than when it turns, which I hate to do. So we'll see. I need to, as I said, it's probably half a position in terms of dollar amount size. I'll get up to a full position in the next 3-4 weeks before the end of the year. Yeah. that's Comcast.
Now, I think before we end the episode, there's something I forgot to bring up earlier when we were talking about AI and
Yeah.
NVIDIA, but I think we need to address, because I think it's funny to address,
Yeah.
the note. Um, that you had some funny comments about that.
So I saw the earnings, and I read a note on the street, and the note basically says for 2030, if there's a trillion to, and I forgive me if I'm off. I don't think I'm that off, but I think I'm probably gonna be not dead on. For 2030, if there's a trillion two in capex, NVIDIA should make roughly $20 a share. If they're able to do 3 to 4 trillion in capex, I don't know where those numbers, unless the government's involved, that's just like silly talk. Then they can do $40 a share. So that's where I'm comfortable being on the other side of that trade. So when I say to you, like, oh, hey, when we buy a stock, who's selling it? What's the narrative that's selling it to me? So you have an analyst who's basically saying NVIDIA can do between $20 or $40 in 4 years out. The things that I saw there also is this is such a new company. You can't even telegraph. You should be able to do better with that sort, in my mind. Again, this is a hyperbole. But that's growth. In 2022, AMD and NVIDIA both did 25 billion in sales. As of right now, AMD is doing 30 something with the competitive chip, and NVIDIA is doing 250 billion. At the GTC, which is the graphic tech conference, or GPU tech conference, I think it stands for, in Washington, Jensen had said he could do as much as 500 billion next year. With a 75% margin, that is a margin. That's a number that's going to attract a lot of other people for a chip, a hardware chip. Yeah. So that analyst, in my mind, is not even thinking the more successful they become, obviously there's going to be more targets on their back. Right. So I don't think it can just be, oh, straight up from we did 25 billion, we're doing 250 now, we're going to do 500. I don't see it like that, and without noise on the way up. Doesn't mean they won't. I don't think they will. I think it's basically irresponsible to say they will. But on the way there, I think you're going to have a TPU moment. You'll have a DeepSeek moment. You might even have an AMD moment. You'll 1,000% have something there that won't go away. Yeah, so that was also why that was the day it reversed. It opened at 195, right. And I had been shorted from 210 down. And so I was like, there's really not much more they can say on the quarter that would get the stock up. They did. And it just went up 14. And I'm like, that was torturous. But luckily, and I sort of was a little bit frozen. I made a tiny sale. And then it came in. And that's where I'm sort of now comfortable being there. And now you're starting to see the sell NVIDIA by Google trade.
Let's talk about that day when NVIDIA reported. And I think you and I spoke about it on that day.
Yeah.
You see a report like that, which I think undeniably everyone can sort of agree was a completely fine, if not good quarter. Yeah. And to see that price action, yeah, and see how it closed, yeah, you have to pause and be like, that probably gave you some sort of, you're like, I almost have to be bigger on a day like this.
Finally, retail on the opening, institutions on the close. I don't really care how stock opens. You've seen me fade huge moves. I sometimes get run over, but you've seen my response to stocks. Or that opening was a retail driven opening, which is, hey, we're back. Yes. Which is fine, which is great. You see it, he's back. He just basically told you this at a conference a few weeks ago. He was in Boston before the GTC conference, and he said the same thing. You could see how the stock was acting on that Thursday, Friday. He was in Boston. Then that, and then the quarter. He said nothing new. So he said nothing new, and I think if you, given the stock is I know it's not over-owned, but it feels to me like it's over-owned, at least by retail, not institutional. Yeah. Came for sale and finally I was like, okay, this is that moment, to your point, where I should be I should repress. But there was a little bit of emotion there for me too, which is just total fatigue, just beaten. And it's working. Let me let it work. And then let me start to, we got to that 180 level, and you and I said, let's sort of knock it. We usually were covering at 180. Let's wait. There's one more level down. And so then made some covers down at 170 and whatever. I'm still there. But yeah, that was it. That was it. Everybody, we saw the I see. I don't know why I needed to see all these MIGs in the last few weeks. I had such a nice year, and I haven't seen a MIG in a while. This will be fun. No, I don't know why I asked this.
Let's last question for you. And I know after working with you for so many years, I know your thinking doesn't necessarily work this way. Like when a good idea comes and and you love it, you go all in sort of kind of mentality. But is there any group, sector, or even specific name that has been notoriously awful this year that you think for whatever reason, or so maybe it's like something you've started to think about but haven't put a position on yet, that in 26 maybe is something you would consider going long, or maybe it's something that's active really well and you would consider going short, but something you don't have a position in yet, but maybe you've been thinking about?
I'm blown away by how poorly the 10-year bond acts. Where what I mean by that is, and the answer is yes, it's healthcare. Yes, it's probably cable as well, but that doesn't answer your question. The answer is that what I haven't done yet is, and I've had this trade on before during the year, I don't have it on now, is being short the 10-year. Um, you've thrown some real bad labor numbers at it, some sort of below average manufacturing numbers. You've thrown a Fed that's saying we're going to lower, not as of when there was 410, 412 a week and a half ago, but now they've almost started to get pushed to where they're going to lower in December. The reason I'm also comfortable thinking that I like to be short is because I think it's going to be a hawkish lower, which you've read about as well, where they're going to lower and say, now we're just going to wait and see. And once we're done, that's almost to me more dangerous than not lowering it and saying we're open for something. So I think it's a lower by 25 base points, blah, 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 which is what's starting to get priced in. And then we're just going to sit on our hands for a while. And then the 10-year probably yields start to go up again. That's my thinking. It's a macro trade. It's just sort of an average idea. It's nothing special. I think the private credit issue, obviously, versus high yields, fascinating, which is the high yield market acts really well right now. And a lot of that is because the old high yield market is basically become the private credit market, excuse me. So these private credit names that used to be high yield paper have gotten beaten up pretty good. I missed that trade. I like to be short. I'm not. But I think it has big effects. Timing wise, if that starts to, you start to see a couple bigger names default. You've only seen one, two, or three now. You see that, and then you start to see some pullback in AI. I've been saying this for, I don't know, 1,000 years, but at some point we'll have a recession. And maybe I'll be right before we're all dead. But no, that maybe no, maybe not. Maybe I'll be saying we'll have it in 27. I guess I don't know. That's there's a couple things that can stick out, and then with that in the background, you don't have a 10-year yield that cooperates. Because to me, price action, the 10-year should be 340, 350 now. It's stuck. It doesn't mean it's not going to trade at 390 or 380, but why isn't it showing some of this longer? I think it's deficit. I think it's bending. So
Last question for you. I know I've said last question three times now, but last one because I'm curious. Do you think there continues to be strength in the U.S. dollar versus Canadian dollar into 26?
great question. That's a great question. I follow that too. That's a great question. And a dear friend of mine, who Kent Kern, who I respect and talk about this stuff. When I said to him, I said, "Buddy, what's going on?" He's a born and raised Canadian, very smart, lives in Alberta, has been working in oil industry for years, and I we talk openly about stuff like this, and I said, oh, "What's going on with the Canadian dollar? Like it's starting to, like it's got to be more than the tariffs." He goes, "Yeah, it's just oil right now." And it's funny because when he said that, I was like, "He's right. It's oil." People aren't paying attention to the fact that oil's 50. That's really a huge tailwind for the U.S. economy. For I mean, given the other side of me worried about a recession, for China. It's amazing that after all this, all the for a week, everyone's recently, oh gosh, Russians went after Ukraine again, or oh shoot, maybe the truce is going to end up being sort of Russia gets a lot of Ukraine. Like these things are real big geopolitical events, and oil cannot get out of its own way. So, to his point, to what's occurring, I think oil is a huge deal. I think the tariff thing obviously has slowed up a lot of the economy here. That I think also is temporary. But it does feel to me like he's right. And this is one of the greatest places on earth and has so much natural minerals. And I'm telling you about how I'm trying to find names in the US that have some exposure um, to these sort of off weird metals and that we can't find normally in right. mines around here. And you can find them. You can't, like, we have, this is, so I hope that politically, I think Carney's so far doing it okay. I know it's debatable. I shouldn't talk about it because I don't really know as much as I should know about it. I'll keep my mouth quiet. But I feel like Canada has the more natural resources than everywhere on Earth at a time when we're looking for them. Right. And we should figure that out. When I say we, I say the U.S. For sure. Or Canada just ends up saying, forget it, like it looks like they're saying, which is great, and we'll do business with China. It sounds awful to say, but we'll do business with other parts of Europe right. or the UK. And so to answer your question, I guess it's a big chunk of that is besides the sort of one-off tariff stuff, it's still energy.
Well, E, I that concludes all the questions I have for you. So, unless there's something you would like to add,
Let me ask you a question since you're smart and I don't talk. Yeah, I can ask you some questions. A couple weeks ago, there was a podcast where one of these tech guys was interviewing the CEO of Microsoft and Sam Altman.
Gerstner, yeah,
You've correct. You and I've been doing this now. You've been doing it for what 5-6 years, which on Wall Street's 30.
30 years. Yeah. I feel 30 some days.
Yeah, me too. And the question that sort of got everyone's attention and the street responded to, what was your take on Sam Altman's question from Gerstner, which basically was, hey, you guys do $12 billion a year, which he corrected. You've burned $60 billion and you've committed to over $1 trillion, 3, 4, whatever the number is in these deals for the next however many years. What's your plan on what was your take on the way he responded?
On the way Sam responded to Brad's question, my initial gut reaction was, ooh, like it was so arrogant the way that he said it. And my biggest issue, I don't think on paper Sam Altman's a bad person. I think what he's trying to do with the company is admirable, and he's obviously built something interesting, and there's an interesting product. I think the arrogance for me and where it becomes a little disgusting is you have companies like Meta, you have companies like Microsoft, Google, who have their own large language models, who have their own chatbots that are in direct competition with you, who have an on par, if not in some cases, better product than you have. And trust me, I know because I use all of them, and I've genuinely almost killed my ChatGPT subscription because of how much better some of the other ones are. And it's fine to be confident in your business, your plan, but when you've committed yourself the way that he's committed OpenAI to all these obligations, I don't know. For me, it's like you need to be a little more humble, and especially I think Brad Gerstner, if I'm not mistaken, is an investor in OpenAI.
and put his tail between his legs and basically said, "Oh, I still want to be a buyer." It was such a soft way of responding. I was very disappointed. Yeah. Let me ask you another way. The market cap, the private market cap right now of OpenAI is $500 billion. You're on conference calls, you read transcripts. I'll give you two other companies, I'm pretty sure, that have roughly $500 billion market cap, $500 billion market caps. I think Home Depot does. The CEO's Decker, I forgot his first name. And I think Bank of America's high 500s. I was reading this recently, Brian Moynihan. If an analyst on a conference call said to Brian Moynihan, "Hey, listen, I see you guys have this huge leftover bond position from the pandemic. You're long a lot of treasuries. The 10 years really hasn't gone your way since then. Your stock trades at 12 times earnings. Are you getting the margin interest that you wanted between deposits and where you're lending? Because it looks like lending's slowing. I see you guys, there's investment banking slowing." I can go through whatever the Q&A from an analyst was, and he threw it back on the CEO. Yeah. What would and Moynihan said similar. Right. Back up, sorry. Reframe just so everyone understands what happened that day. You could reframe when the question was asked, what did Altman say that got everyone going? So just so I can make the better comp, I don't need to just throw this out there without you and I knowing.
Of course. No, it's one of those moments where he's lucky he's not a publicly traded company, because let alone an analyst, but Brad Gerstner being an actual investor and an analyst, you know what I'm saying? Like, you owe him 100%. You owe him an answer that's better than the snotty one that he gave, especially he's an investor in your company. An analyst, okay. Moynihan gives a answer like that, the stock goes down at 5-10% the next day. Right away.
And the answer essentially was what Altman said was, first, we're doing more than $12 billion. We're doing a ton more than $12 billion, which I think he re-rated it, let's say 20 on an annualized basis. So instead of doing $1 billion, they're doing $1.5 billion a month, whatever that was. But he also then said, if you're not happy with your investment, I have other people that will buy it from you. Can you imagine a Home Depot CEO, a Bank of America CEO, with an analyst who gets a little bit chippy or just asks a question? Hey, a good question. A good question. And frankly, these are guys, this political era we're in is everyone so, and a lot of conservatives specifically have been like, listen, why can't we just debate? Why can't we just go back and forth? Why do we have to name call? Why can't we just break something down? Let's not make it personal. You take a side, I'll take a side, and let's just really heavy debate. That's a real big sort of conservative way of thinking right now, because there's been obviously the media so salacious with let's just do one-liners to sort of end stuff. But you got an opportunity, debate. Let's go through it. Hey, listen, maybe I'm wrong. Maybe I'm right. So you had a $210 NVDA price. You had a $500 billion OpenAI price. NVIDIA goes down, let's say from 210 to mid 170s. Oracle from 300 all the way down to 230, I say. So you have a lot of these names that have given back anywhere from 15 to 20%. Right. You have a CEO of a company that's private, that's trying to raise money in OpenAI at $500 billion. Can he do a down round of fundraising? Where's that? Should that still be $500 billion? That's pretty difficult to raise money with the backdrop of whatever, his main chip supplier and some data centers, obviously. I know he's using more than Oracle, but like, you've seen that. Isn't there some correlation to your price? You can't just raise money here if the backdrop is your comps that have been around many, many more years, have much deeper balance sheets, and frankly, mostly cash flow positive. So not only do you answer the question like, way too arrogantly. Like, are you going? Are you going to then do a down round of financing if these things go lower? What's the thinking there? Or are you just going to sell the stock to the public who you think's retail at $1 trillion and get
They'll punish you.
punished?
If he goes public, I think investors will punish him, and I think what you just said sort of feeds a little bit of the bear thesis that you've given us on this episode. He goes and raises a down round at not 500 billion, but you pick the
That's
number,
right.
whatever the next number is, whatever.
Preferred at 400 with an op, however fancy you want to make it.
If he goes and does that, if that's what ends up happening, imagine what that does in the public markets to Nvidia to or like if that exactly.
Look at SoftBank stock in the last few weeks. Right, that's all. It's straight down on a like. He's basically selling ARM. He's selling his other positions to raise money to continue to when not only is OpenAI potentially has a competitor, but now you got Gemini that's cooking. I don't know if Claude. I don't know. I shouldn't speak. I don't know much about Claude, but I do know there's legitimate competition for a $20 a month subscription. What did the CEO of Microsoft also say on that call, which you and I think we talked about, and I'm forgetting. He said something like, I'm it's not a problem that I'm having with chips. There's a glut of chips, but it's the hot warm box. I forgot the expression for the data centers that he's saying. That's where I'm having a tough time, which is the energy into the data centers in Virginia, Texas, wherever they're building them. A glut of, he said that, CEO of Microsoft. I'm not using any, he used the word glut of chips. Right. Maybe he was exaggerating, but I don't get the impression that NVIDIA shareholders think they own something that's commodity like business that's potentially in a glut phase. I don't think that's the case. So, again, just in terms of being on the other side of how we think stuff through sometimes or how we come to something, that podcast was a little bit eye opening. Yeah, edgy. A little edgy. Right. What are you seeing in terms of sort of price action end of the year? Anything stick out? Is it still manic markets? Are you seeing technicals kind of make a difference? Are you seeing is this last move just because the 10-year went from 412 to 4, and that's got the tech names going again for 3 days? What do you see?
I think that's a bit of a. I mean, yeah, the 10-year move definitely helps the tech names for sure. I think what's become really evident and something I've talked a little bit about on the TikTok, just within tech,
Yeah.
there's been, and I'm not going to remember all the names that are associated with the Google and the TPU thing, but it's become very apparent where I think before the AI trade was buy anything with AI anywhere as fast as you can. And that's what you saw the majority of this year. Yeah. And now with the Gemini news, with the TPU stuff, with these cracks beginning to show in Oracle, OpenAI, NVIDIA, the market has become, I think, a little more selective in the names that they're choosing to buy to, I don't know, be exposed to AI. So it's been Google. It's been I'm gonna forget Loom.
Apple's fine.
Apple's fine. Yeah, some of these stocks who
Amazon's okay.
exactly. I think also that speaks a little bit to these names haven't issued monstrous amounts of debt
No,
to.
they are issuing debt, but they don't need to issue it just because it's cheap, kind of thing, like a Berkshire with the yen kind of thing. Yeah.
But there's just been other areas of the market that have become who I think have been beat to nothing all year. That people are sort of like, okay, I've had a great trade in Nvidia or Oracle or CoreWeave
That's right.
this year, and let me rotate into something else.
What do you think about, is Bitcoin leading the queues? From what I've been watching, Bitcoin basically is sort of this retail trade to me as well. Yeah. And it feels like when retail comes out of names, they start coming out of Bitcoin. Are you seeing that? Are you seeing Bitcoin leading or following?
I think Bitcoin leads. I think Bitcoin sort of. I can't remember who said it. I maybe was the guy from.
Mm.
I think he might have said it, or someone from. But anywho, that Bitcoin's sort of a risk proxy,
Yeah.
like dependent on, and you saw it all year. It's no different than AI. Like everyone was, how can I buy these high tech, these crazy growth flyers? And you saw Bitcoin go on this massive run. And now that the cracks are showing,
Yeah, it feels like that, right? I mean, it found a little bit of a level at 88, 90. I know Ethereum and some of these other names have completely imploded. Bitcoin finds a level, um, but it does feel like it's leading because I saw that kind of pop a little bit on towards, whatever, Tuesday, Wednesday, and NASDAQ kind of just let me go right through. I'm fine now. And Qs start to go, and I'm short Qs, as you know, as well. That's another episode, but another. I don't have anyone to hate on that one. That's just myself. Why do you? I just hate myself for still doing this. No. Yeah. So the Bitcoin thing's fascinating because it feels to me like that's still this sort of volatility. Not that anyone seems to care. This is exactly what I remember from 99 to, well, more, I shouldn't say that, not 99 at all, more 2000 and beginning of '01, where you had these real manic big moves, and very difficult, very difficult to stay short. When you're like, this is, Qs go to 580, they feel like they're on their way to 550, and you're like, just like, this is perfect. I should get bigger here. This is great. This couldn't act any worse. VIX barely above 25, 28, like so much room to have fear, and then all of a sudden 10 years starts to tick down, Bitcoin has a bid, and you're getting squeezed again. But it feels to me like I remember this as well, this up 800 down, very tough to have a position. So you feel that on the opening, or is it more sort of in my world that I'm kind of thinking about that? Are you feeling like liquidity is just dried up? Are you seeing that when you're trading?
100%. And I mean, and some people who listen to the pod or watch the TikToks know as well, like my trading window is obviously super short, and I'm not doing a lot of the super long term stuff. But I'm starting early in the morning pre-open. I think when I was doing this 3-4 years ago, it wasn't uncommon to see some names have a few 100,000 shares trade pre-open. And now, I mean, there's been just in the last week a few examples where I was like 2,000 shares traded, and you want to be there, and you have a great idea or whatever, what have you. And it makes it so much more difficult, obviously, to be the proper size and to truly, I think, extract the value from when you have an idea that you're like, I know that this is going to work 80% of the time, so I need to be there.
And then the bid ask spread. At least for me, I'm like, you can't, 20 cents in a name that's trades at $30. It's going to trade 15 million shares today. How are you trading 15, 20 cents wide? You're seeing that kind of pre-opening, probably even wider sometimes. For sure. Yeah. Would you say the lack of liquidity these days, when it's difficult to sort of be in these names with any kind of size, that have you noticed outcomes are correlated to market direction more? So listen, I got a couple of names in the opening that I really like a lot. I won't give the specific names until you want to tell everyone exactly the names, but I like them. But no, when I like these couple of names in the opening for X, Y, and Z reasons. There's some volume, and I see markets super sloppy, and for the next 15, 20 getting something. Do they tend to not work as well? Or you like we've had these days where even good names work regardless of market direction? Or is it now you got to be right with name, volume, and market direction?
Yeah, it for sure. Obviously, it depends on the day. I think the few days that we had really nasty action in the queues, that was sort of outlierish, where it didn't matter how good. I'll just say, you remember Datadog? It was a great report. I think some analysts upgraded it the following day. It couldn't have been a more perfect pattern the prior day. And it was one of those names where I can't remember how expensive Datadog, but it was one of those names that should be up 10 points the next day. And I remember speaking to a few people about it, and everyone was sort of in unison that was like the call of the day. And that, I think, was a day the Qs had a super sloppy open. I think opened down, I can't remember how much, but with the Qs, obviously all of software got slaughtered too. And so no matter how good, which Datadog reported an incredible quarter, no matter how it didn't matter. And now I was saying this to Joe, who we talked to. Datadog's given back the entire post earnings move.
Is that right? Because I was going to ask if it just did a crappy opening and then rip.
Which is interesting because like I think that coincides with, I don't know if that's just software. People are really not software fans right now because they're afraid that AI is going to really harm software. Is that the idea? But um, I think there's obviously a big element of the queues just sucked for a few weeks and nobody wanted to own anything software, anything tech for that period of time. And it didn't matter that Datadog had a great quarter.
Software's getting sold. AI is getting bought. Software is getting sold. I read something. I forgot what piece. You probably remember. If AI is going, it's not my idea. If AI is, it should. I wish I came up with it, but I didn't. If AI could cure cancer, if AI could do all these replace labor, if AI could do everything that it says it could do, it could probably figure out how to replace the Office monopoly that Microsoft has on it. It could probably figure out how to go through CRM. It could probably, obviously, that's the theme behind what you just described.
Well, tell me why the utilization on the what's it? I can't even remember what it's called because it's so unpopular. I can't even tell you what the name of it is. Microsoft's got they have their own AI that they've basically OpenAI's outsourced the LLM to or are licensed it to Microsoft to use within Excel, within whatever, all of their suite of products. And the reports are awful. Nobody wants to use them. And I don't know if that's a function of OpenAI's LLM being poor or Microsoft hasn't integrated the LLM properly into the apps. But I can tell you firsthand that when I go onto Google Sheets or Google Docs and you operate out on these apps through Google Drive and you pay for Gemini and Gemini can work in the apps with you, the integration is flawless. It's a very, very seamless in that when I see how Google does it, I'm like, it makes sense to me that someone could upend some part of software. But the way that Microsoft and OpenAI have done it, and you read some of the reviews, these people who are software engineers and say, I can't use the product. Like it just doesn't understand what I needed to do. Those are comments to me where I'm like, ooh, you know?
Right. If that it in terms of the word's way overused, but like let's assume that it doesn't work to the nth degree. I hope it can work AI, but you can definitely see it start to make a difference on the lives of engineers, which means writing code and writing all those sorts of things, which are above my pay grade. But definitely, that's it's funny you're starting to see that too. Good. It's great to be here, buddy. I love this. I love this setup here. Dang it, I'm jealous.
We usually do this.
Look at this. You got freaking, buddy. We got snow. You got art. We got library. I don't think I read half the books, but they look good. They look good. They. I pretend like I read them. Maybe I did. I just forgot.
You know what? They look good. You know, you just got to tell people, crack them open every now and then. Awesome. Well, we really thank you so much for being on the podcast today. This was a great conversation. Hopefully, all the listeners get some value out of this.
You're doing a great job, buddy. Thanks for having me.
Thank you so much. Well, we'll end it off here, guys. Thank you. Have a great night. Take care. The content of this podcast is provided for informational and educational purposes only and should not be construed as financial, investment, legal, or tax advice. The views and opinions expressed by the host and any guests are solely their own and do not reflect the views of any employer, firm, or affiliated institution. Any examples or strategies discussed are general in nature and may not be appropriate for your personal circumstances. Always consult a licensed financial advisor or other qualified professional before making any financial decisions. The host and production team assume no liability for any loss or damage resulting from reliance on the information provided in this podcast.